Good evening, friends. This is Shivam Rathor, and today we're gonna learn um, how to do consolidation for consolidation process with 100%, 80%, 40, and 20. So to run the consolidation method, I have already explained how we can run the consolidation method, consolidation process, how to manage consolidation, ownership, and all yesterday's class. And today we're gonna learn how to manage consolidation with 180 and 40 and 20 likewise. So without wasting much time, let's go to the Excel sheet on through which I'm going to explain the consolidation method, like from very starting. Okay, so let's start. So today in consolidation, so consolidation methods, how many methods? First one is subsidiary. Okay, joint venture, equity, cost of which we can also refer to as fair value of consolidation. Okay, so first one is subsidiary method, which is more than 50%. Then second one is joint venture, which is equal to 50%. Equity method, which we also known as proportionate method. Okay, and then for like last one is cost of, which we also refer to as fair value of consolidation. Okay, so let me drag this up. So now I'm going to input the data over here, like which is what is what. For more than 50%, okay, subsidiary, then this is equal to 50. Anyways, if I'm going to put like equals to it, going to convert this into the formula, right? So I'm going to write like this, and this is 20 to 50%. Okay, then less than 20, this one 20. This is cost of and fair value. Okay, so I'll merge this so that it will look, oh, I didn't notice. Okay, I'm just drag it like this. Now so now where is holding has the control over subsidiary? So in which method? So in this we are assuming the case scenario. We are assuming the case scenario for the holding and subsidiary. Okay, so in this case scenario, we are assuming that there is one holding and one subsidiary. Okay, and in subsidiary, because it is more than 50%, there is full control. So that's why like we do 60, 80, 100, and more than 50%, all the assets and liabilities of the subsidiaries will that merge into holdings balance sheet. But if we talk about the joint venture, there is only 50%, okay, control for the subsidiary and holding. So in the parent's balance sheet, which is holding, so what we are doing when we are doing the consolidation, when we do the consolidation, we prepare parent balance sheet. So we have the balance sheet of the holding and we have the balance sheet of the subsidiary. So we consolidate and prepare the balance sheet of parent company, which we have both the figure of holding and subsidiary company. So in proportionate, we will take holdings, like holding assets and liability would be 100%, but in subsidiary, and here so subsidiary method is this. So here the name is different for, okay, I think no, it's okay. So this joint venture is also known as proportionate. So in the parent balance sheet, we will have 100% of holding and only 50% of the other company. I'm talking about this, all the assets of liability of the joint venture in the joint venture, okay. Then so over here, let's take holding assets, H for holding assets, and liabilities, okay. I'll just write it like this only. So here this will it get added completely added with subsidiaries assets and liability, SUB subsidiary assets oblique liability. So there will be no, in 100% there would be no such assets or liabilities, okay. I have to write this again. Assets equal because due to this it's not gonna take, like I have press equals to right over here, that's the reason, okay. Just okay, I'll just write it like this. That means that holding plus subsidiary of both assets and liability for both holding and subsidiary, and this will be 50 to 99%. There will be calculation of goodwill, or we can say goodwill or capital reserve. Then we will calculate the minority interest. What else? Minority interest. What else we gonna calculate over here? Retaining, right? The profit actually. Retained earnings, which is profit. So assets of holding will be 100%, but the subsidiary asset and liability will be 50%. When we'll add it, first we have to make the Excel working, and then we have to do the working in the application. So how do we check? We should know the working already. So I'm just gonna track this. So this should add, okay. So the result should come in the application. So this would be 50%, and here we will have the same calculation of this. So goodwill we will calculate, mining monetary interest we will calculate, and retained earning we will calculate like this in both the cases. In case of equity, uh, equity, okay, in equity method, so both the subsidiary and holding, it will combine in the parent balance sheet, but calculation here will be little different. Here we will not have the goodwill or monetary interest. We will have investment amount. So this is in case of equity. So like here we have investment, so this is in case of equity, so this known as associate, not subsidiary. So because we are not owning this company, VR means holding, because it is less than 50%, we cannot own it, so it doesn't have full control, so it is known as associate. The one is holding and one in which investing, so whatever the amount is less than 50%, but more than 20%, then it is known as associate. This will be whole, but in the consolidation balance sheet, asset and liability will merge completely, but there will be a calculation of retained earning is fine, but we will not have goodwill or monetary interest. Okay, in spite of it, we will have our investment amount. Okay, investment amount, and retain earning, but if we are not calculating, so we will not calculate the capital reserve, so we will calculate investment amount and retain earning amount. So this is all about consolidated balance sheet. So the last one is cost of or fair value, whereas ownership is less than 20%. So here only we will get consolidation balance sheet, we will only have investment. This second one, we will take this 50%. This will go like joint venture, but for the subsidiary we can say it will be on the ratio of let's say 20% instead of 50. So this joint venture, we can see in the balance sheet, this and this is quite similar. Joint venture and the equity, joint venture and the cost of, this is quite similar. Here we have to make percentage, see, every time holding is 50%, assets and liabilities, but subsidiaries, it is changing. So in joint venture and fair value, we will take the exit percentage while which we own that company. So in joint venture there is no issue because it is already 50%, but in fair value, let's suppose we are owning 10% only. So this so here in assets and liability, also all these assets and liability we will owning as 10%. Okay, depending on whatever the ownership. And here the calculation, in this calculation side, I'll write the calculation word over here. Calculation. Okay, in this calculation side, the ratio of 50 and 20% here, because we are taking joint venture similar to sort of similar to like cost of, so we gonna take the same calculation as we have done for this. So we simply gonna take this, okay, the whole of this thing, and we gonna copy and we simply gonna paste it over here, because the calculation is the similar to this joint venture. in spite of percentage. Like here it is 50% fixed, but here let's suppose we have taken 20, right? So only the percentage gonna be changing for subsidiary only. So we do not have the goodwill over here. Here we will have only investment calculation. Investment calc. Okay, so we will also not have the retained earning. So I hope there is no doubt. I have written each and everything so that it can make it clear. So we are doing let's do the 80% first. So where is my 80% sheet? This one. Okay, so I have already prepared. So you guys have to prepare this sheet in the similar manner like which I have prepared for. In the Excel we have to prepare this sheet firstly here in the Excel, then we have to prepare this like we have to do the calculation in the application in the smart view. Or so this is holding, this is my subsidiary. Okay, so holding is owning 80% and this is our consolidation balance sheet. So now this is a balance sheet. We have equity, reserves, current liabilities, and then we have current asset in both of them. Fixed asset invested in H. So H has invested 8 lakhs in subsidiary. Now we go into prepare the consolidated balance sheet. So as I told you, just remember this working sheet. This one, this is the one which we should always remember, because on this basis we going to make we going to do the calculation like for each and every consolidation method. So it is this sheet is very important. So equity share capital will be the subsidiaries share capital does not get added. So we have only fair capital of the holdings. Like in previous lecture I have, like in consolidation process I have taken the example of Moonlight and Moon Limited and Light Limited. So in that only I have taken the fair value, like the initial value, and then I have then I brought the value to the consolidation, right? In the similar, and here also we gonna do the same. So let's come to this one, current liabilities. Add both of them because this is 80%. So 100% of H and 100% of this subsidiary. So I have added them. Okay. Then we here also current and asset we have to add both of them and have to write the amount in the consolidation, and we add it and simply write it over here. Now come to the working. We will calculate minority interest, goodwill, and always investment amount will always get 0. Okay, this would be the result in the smart view if we do the working in the application. So if we are not getting this result, we are going wrong somewhere. So when we, like at the time of the projects, these data is like imaginary. We get the data through the clients, and on that basis we do the calculation. So now we going to create a consolidation. We will run the rule of consolidation, and we will load, and after running the rules our balance sheet should tally always. This is liability and this is assets over here, so it should tally like this. So if it doesn't it do not carry, then we have to do the calculation manually. So we do not have this is not necessary to be check this get aggregate always. So we will always do the calculation on the data validation, and we have to see all the balance sheet tally. We will check for monetary interest, goodwill, and retained earnings. Then the name which I have taken is instead of retained earning I have taken reserves. uh, we can also write this as a retained earnings. So this is a P&L net profit. So first let's calculate the goodwill. So I have invested or investment of 8 lakhs. Okay, so this is the formula, investment amount less whatever is the percentage of net asset. So 80% of what here, 80% of this subsidiary. Okay, so like we get to know the 80% of which column we gonna take. So we gonna take 80% of the subsidiary, but for which like for which figure. So we going to take we gonna take 80% of net assets. So this subsidiary, okay, we not gonna take this 80% of holding, as I have already written over here. We gonna take 80% of subsidiary of net asset. So we are calculating goodwill. So and holding, holding has bought shares of subsidiary. Then only goodwill, monetary interest, the reserve are calculated. So all the calculation would be on the figure of subsidiary only. Okay, so so when do we calculate, and now the another question will be when do we calculate the capital reserve. So goodwill and capital reserve is the same thing, but the capital reserve is like goodwill as what I have said, the goodwill is asset and capital reserve is the capital of the owner. So when we are buying A limited buys B limited, like so like they have to see, both the companies have to see, or let's say A have to see, because he is the holding, has to see how much goodwill is getting generated. So the and that only the price rate in which B buys B limited by A is more than the cost of the net asset, then they will have goodwill. So like suppose their net asset is 100, and somebody is buying their net asset. So what actually they buy in joint venture or other things? So they basically buy assets and liabilities here, which I have written. See, so if for 100 rupees of assets we are paying 150. So why we are paying excess? Because it is a goodwill of a company, then goodwill is generated. So similarly here goodwill is how much? 4 lakh, because we have paid extra for H limited, because H is a holding. Now let's move forward. So how does minority has calculated? So this minority interest has calculated like this. If I write this over here, so what we have done is we have simply taken this, not this, we have taken this value and we have added this one. and like I also have to put this over here, and we gonna take 20% off. We have to write the percentage sign with the 20 and simply gonna press it. Wait, something else went wrong. This figure plus and now we're gonna put here for 20%. It is giving him I don't know why it is giving 20 right now, but the actual figure would be 80% only if we calculate it manually. Like if I open the calculator over here and we do the calculation, we have added 4 lakh with 6, this become 10. Okay, so and now we have to input the percentage. Sorry, so we have taken 4 lakh plus 6. This will give us 10, and with this 10 I'm simply gonna write 10 over here. 10 lakh. Okay, now we gonna give the percentage of 20 over here. So I think the figure I have taken the wrong. No worries. So like this we have calculated. Now we get back to the reserves. Out of this this 4 lakh, how much for holding H Limited holds for this 80% of like how much percent of this. So 80%. So this will goes to, like this will come here. Here we gonna do, I'll show it with the formula. We gonna simply choose this, actually not this one, this figure, and we gonna take this and we multiply with this and provide the percentage of 80. Then what is the okay, sorry, so sorry, I forgot to write the percentage, and simply gonna press OK. Then our value will be 48. So 20% we have already given to this. So what remaining out of 100? 80%. So 80% we have calculated for this figure. From here we gonna simply multiply this figure with the 80% and we gonna get 32. And if we add this, like simple, this consolidated figure I have taken over here after giving the portion 80% for this figure and 20% for this figure, and after doing the consolidation we have got this figure. And similarly, instead of this we gonna get figure of 1,80,000 in this minority interest after providing 80% of it. So the calculation is 100% of holding. This for holding we have given 100% for this holding, but in subsidiary we have given the 80%. So 80% of the subsidiary is retained earnings, which is this figure. And then we have calculated or reserves. This reserves retain earning, reserves, profit, everything is same. So we have given this 80% of this figure, and after consolidating we have got this figure. Now let's move back to the application. Here in dimensions we create this manage. Now we're gonna go into the entity just to check the data. Here entity, let's check data for total for this US, not total actually. We gonna check this data for here for this and this legal entities. Then we gonna drag this domestic, and I'm just checking this there is data or not. Yes, there is a data for this. So okay, let's get back. So we are taking 80% example. So and so now let's take the another example, like 80% is clear, and I have created sheet for the 40% also. So here subsidiary is this, and holding is this, and subsidiary is 40%. So which consolidation method it would be? So this consolidation method would be equity. Okay, so this method would be equity. So these are the liabilities, and this is the subsidiary, this is liability and this is asset side. So here we will not add this is the associate, as I have mentioned over here in this sheet. I didn't write, but basically in this inequity we take associate instead of this doing the consolidation. So we simply had we will not add both these figure, holding of this and subsidiary of this. We are not gonna add this, we simply going to do associate. So that's why it is 42 associated value has taken. Now current asset of only holding, not this, we not going to consolidate, we going to take associate of this value, only holding. Then fixed asset, we will only take this this value, initial value of this holding. Then here so now here on subsidiary, so it's nothing about this. So this is this will not have the share of so it has own liabilities. So now we will calculate the results, retained earnings, this. So this will be 100% of this, I mean subsidiary, this will be 100%, plus we will calculate like how much its own so this will like holdings, or if you have to put this like if it is creating a problem, then we can take this 40% here. So we are calculating reserves. Okay, so this 100% of this holding. So what about like asset side? So retained earnings, so we have 100% of our holding, and how much percentage so we are calculating the retained earnings, so the percentage will be calculated on this amount. So how much percentage we gonna calculate, we gonna take to calculate this for, so we are doing the calculation for the consolidation. We are not doing the calculation for subsidiary or holdings. So we do only calculation for consolidation. So in the consolidated balance sheet there is only 100% of H and 40% of subsidiary. Then what is the calculation for this retained earnings? So we will have 100% reserves of holding and subsidiaries 40%. Okay, fine. The reserve will be calculated, this reserve figure will be calculated 40% of this figure. Okay, and we will get this figure like 100% of, I'll write it over here, 100% of 100% of what, of holding, and this 40% of subsidiary. Then if we consolidate, and we will get this figure which I have written over here in consolidated column. Now here like in investment and associate, we do not have these two in equity method. We have these two in equity method. Okay, if this get so if we eliminate it, we get subsidiary method with these two. So investment and associate, this amount will come exactly in the consolidated balance sheet, but this investment and associated income, this new account, this will come in consolidated balance sheet only. So how do we calculate this? So this is 40%. So 40% of our this retained earnings. Okay, I'll write it over here. Like 30,000 of this subsidiary, which is for 80%, and we will get the figure of this. So this is how we have calculated the result for 40% of retained earning. First is coming here also, and the second is coming here with the name investment and associate. Okay, right? So I hope this is clear. This 12,000 affect two sides. One, this is at our asset side, and this one on our liability side. This is clear, I hope. And the balance sheet, our balance sheet must tally. So this we have to make sure. whenever we do this working also, we have to make sure that our balance sheet always tally. So I hope 40% is clear. So only two calculation we have to do, investment in equity company, and then for reserve, which is investment in association, which is this income one, and then the reserve one, the liability side, which okay. So this is for 40%, and this is for 80%. So now I am going to input this trial, uh, these figures, and then we will run the rule of consolidation after inputting this figure. Okay. So let me show the POV. So this is going to be the POV, as I have already taken this. This is going to be POV on which we have to input the data. So actual scenario, then this is entity. Okay. Then we have year January, then we have year year FY25, then period. Okay. Likewise we have the data over here. So with this format we have to input the data for this 80% sheet, and similarly we're going to do the 40% in the same. Okay, I'll try inputting the data one by one, like over here. So first, for if we get the figure like this, what we have to do is first we have to set the POV for that. Okay, then we have to do the member selection. Then first of all I'm going to set the POV. This is one is for the holdings, this one figure, this is connected to smart view, that's why if I double click on it, it creates a problem. This one is for holding, and this one is for subsidiary. Okay. So now I have to set these POV and the member selection one by one. Let's select the POV first. So view will be periodic and something like this. Then we have to take entity over here, or we can do one thing like this. We can simply insert cells here, like this, and simply we're going to cut this from here and bring this here. Similarly for this, and same thing for this. Today I'm going to just set this POV point of view. I'm going to do the member selection, and tomorrow, like on Monday, I'm going to input the data, consolidation data here in this. So insert, we need 2 more columns. Insert. Okay, so now I'm going to cut this and bring this over here. After doing this, we have to refresh it. Okay, now we're going to refresh it. Okay, now I'm going to set the member selection, do the member selection for each and everything. So scenario would be actual. This I'm going to bring from here to there. Okay, set. Now entity, we will pick according to the application. Here legal entities we gonna go in this US region. In this US region we gonna check it for, or let's see in the international also. US region this is now. Let's try checking once in the application what do we have actually. So here in the application we have to go to the entity, right? Yep. So domestic, this we have operations. Okay, I'm going to choose this one only. So I'm going to choose this from total geography. I'm going to choose this vision operation west. Okay, first we have to select this vision. I'm going to bring this over here and going to select this. Then year would be, let's see what is in the application. Year would be periodic, sorry, view would be periodic, and year would be FY25. Let's take this FY15, and period no period, or sorry, we will take period as January. Okay, then currency, we will take entity currency. Then movement, this take times, we will take no movement. Then data, here in the data we going to take no data, we going to take data input. Then for consolidation, input, or yep, we going to take consolidation input, sorry, contribution input. And for intercompany, there would be no intercompany. Multi-gap will be local gap. On no gap we can also choose no gap, but we will take local gap. Product will be no product. Okay, Now account. Now for the account, we'll go to balance sheet, traditional balance sheet. This total asset, current asset, cash and cash equivalent. We have this bank checking account. Okay, so we're going to take this only here and simply gonna press OK. Now after inputting this, now we have to take movement. Where is the movement? Here, let's pivot this. Okay, so here we have to take account, if wait, I'm going to show it with the sheet which I was explaining yesterday, this consolidation dimensions. Here in the consolidation dimension we have to set the POV like this only. So we want this change in cash, so I'm going to copy this from here. So simply going to cut this from here and going to paste this same thing in our created balance sheet. We want this change in cash and common stock. So let's take this. Here I'm going to drag this down, and over here I'm going to give this, like I can simply write as I know the name. So I'm going to write change in cash here. Okay, see the data has already taken. Now here I need, as I know the POV, I'm already going to write change in capital expenditure. Okay, here I'm going to take machinery, and we have to write words very correctly. If we take anything wrong, it's not going to take the data. Details, then here I'm just going to drag it down more so that we can get the data. And simply for this one also, now we need changes in other current liabilities. Then we need changes due to issue of stock, changes in net income. Now here we're going to take revenue. This here, the reason of taking machinery and equipment is we have to take any this asset. So that's why instead of taking any other thing, I have just taken machinery over here, machinery and equipments. Now here we're going to take common stock as like similar to this sheet. this one. See, here I have taken the cash. Okay, this as a current asset, but here in the current asset I have changed the POV because this is not in our application. So here in the current asset I am going to take payable to bank. I have to take P as a capital. Okay, now revenue as a domestic we have to take revenue domestic, and simply I'm going to refresh this to get the data. If there is a data, it's going to take. Okay, see, there is a data in the application. That's the reason it has taken input for this figure. Now this is for the holdings, right? I'm going to copy the same sheet over here and again going to refresh it so that we can get the data. Okay, so we get the data. See, we have got the data over here. Now we simply can make the addition like this. So as we are running out of the time, I will input the data another time, like on Monday I'm going to explain the consolidation process. So this is the entity which I have taken. So due to the lack of time, I'm not able to explain each like 100% 40% and 80% consolidation, as I hope with this example, the example which we have taken for this 40% and 80%, the half of the thing has already been clear. Now in the other class we simply have to run the process of consolidation by inputting the data like the according to this examples, and after running the consolidation, after inputting the data over here, and then we're going to refresh and submit it, we have to go to the application, back to the application from this portion, and now from here under this application we have to find this consolidation here, and here in the consolidation, after it get open, we have to set the manage consolidation